No deal yet between Deutsche Bank and the Justice Department. The Wall Street Journal is reporting that settlement talks over mortgage securities are ongoing, despite a report last week that the bank could pay a $5.4 billion fine. Joining us right now is Mark Avallone. He is Potomac Wealth Advisors president. Mark, it's good to see you. Thanks so much for joining us.
It's good to be here.
Before we get into markets and how you're allocating capital right now, are you worried about this Deutsche Bank story? The Journal first broke the story months ago that they were facing a $14 billion fine from the Justice Department. Now the Journal is reporting that these negotiations could make it a lot better, $5.4 billion, and that's why the stock rallied on Friday. What's your take on the Deutsche Bank story and its impact on broader markets?
Well, the $14 billion is a huge number. 5's a lot better, obviously. What concerns us is which banks are next and how aggressive the DOJ is going to be going after the other banks.
So do you want to stay away from the financials then?
Well, European financials are a sector that haven't been strong, and we don't expect them to be strong. It's a different story in the U.S., but developed Europe isn't very exciting right now.
What do you think about this, Anthony Scaramucci? I mean, the Deutsche Bank story, I think, is worrisome to people because of its derivatives portfolio. If it has to start unloading securities, is that going to put a big pressure on the broader market?
It is, and so they'll probably renegotiate that deal so that doesn't happen. They'll definitely get a bailout if necessary from the Germans, but I think ultimately the European banks are in a disaster zone, Maria, and many of these banks have negative equity. So the bigger, broader issue, and my question is, what happens when the Italian banks start to fail and the Spanish banks? What do you think happens in Europe then?
Well, that's one reason we're not there. I mean, there's so much political instability there. The banks are not as well capitalized as the U.S. banks. There's very little reason to be in developed Europe right now. London has been the exception. I mean, leaving the EU has led to a stock rally there. London's at an all-time high. Maybe being in the EU or leaving the EU has been a good move for London.
Yeah, but they say that there's going to be a timeline for Britain's exit from the Eurozone. British Prime Minister Theresa May said this weekend that Article 50 will be triggered by the end of March 2017, leading to a full exit by 19. Do you think that? Do you believe in that timeline?
Well, there were some comments today by some other countries that said that's a little too aggressive. They want to see what that proposal fully means. But it's refreshing that the British Prime Minister actually wants to follow on the will of the people.
Yeah.
That part's very refreshing.
In terms of, we talk about the dire situation in Europe, how is there not a spillover here into the United States?
Well, we went through this already. The DOJ's already gone after the American banks. We've paid huge fines, and we're very well capitalized, our banks. So we don't see this as a global contagion. It will slow down European growth, which is why we'd rather allocate capital to the U.S. or to emerging markets.
How much of this was political posturing by the Obama administration through DOJ to look tough on big banks? You know, they leaked this big number, and then they had to backtrack on it when it looked like it might topple, a major bank. So how much of this is really political posturing?
Well, that's a great question, and it's tough to say, but I had those same thoughts. I had a feeling that Merkel was on the phone saying, what are you doing? You're going to not only collapse our economy, it could have a global effect. I mean, Deutsche is a major global player. So 5 is a more manageable number. That's why you saw the stock spike on Friday. And at some point, politics does come into play.
How are you allocating capital right now?
Well, it's been mostly U.S. We continue to be there. If we're going to be overseas, we like emerging markets. The demographics in emerging markets are terrific. These countries don't carry the kind of debt we have. So what we would do is, for international exposure, overweight EM, and domestically, we like and we prefer to be domestic.
So even though the U.S. economy is sort of slow, we're getting the jobs number out this Friday. Any expectations? I guess the estimate is 170,000 jobs created and the unemployment rate to hold at 4.9%. What do markets do in that regard?
Well, the labor market's been firming. We've had slow wage growth, and we expect the jobless claims number to be a good one. It doesn't feel like a great recovery, but the reality is the labor market's firming and the consumer's improving. So we expect a good jobs number, and we think the market continues slightly higher and chugs along from here.
All right, we'll be watching. Mark, thanks so much.